I created a trading indicator that is gonna let you know exactly how high and how low that stock you're trading could potentially go. We're gonna, in this video, break down how to use the indicator, and I actually built this in our last YouTube video. So if you wanna learn how to build your own trading indicators, I'll put a link in the description below to that video. First things first, once you've got the indicator downloaded and installed, all you have to do is pull up a 4-hour time frame. Now you can see here, we've got these two different levels. We've got a blue expected low and we've got a yellow expected high. Now, essentially what this indicator does is it is going to take into account the previous day's ranges and the previous day's historical data. And it's going to use those levels to give you a realistic probability, if you will, or expected point as far as how high or how low that stock might go. Now, with this indicator, you in theory could use it as a standalone indicator, which means you'd make all your trading decisions using it. However, in my opinion, it would be better suited to be paired with another technical strategy or technical means. And so let's first talk about, if you have another trading strategy, how you can actually apply this indicator, this expected levels indicator on your chart, to use it to help you aid in making a better trading decision. What you can see here is obviously we're looking at Google GOOG, and today we've got an expected high of 187.84 and an expected low of 185.40. Now, we've actually already hit, touched, and broken, and at this point obviously retraced above that expected low. So you can see this 4-hour candle has touched the expected low. And now today we're looking at our expected high, which we haven't hit yet, and we are currently sitting, let's see, just about 0.25, about 0.25% off that expected high. Now, if we want to, let's say, set a trade plan, let's say you're using moving averages, and we'll use a couple moving averages that I use frequently with my swing trading, and we are going to apply the simple moving average, so the 50-day SMA. And let's pull up Apple, for example. If we look at Apple here, each day, the expected high and low is going to be recalculated based off of the opening price. Now, let's say your trade plan was to look at this 50-day SMA, that red line right there. And let's say that was going to be your take profit. Now, if we look at our expected low at 209.61, and let's say in theory your take profit is that 210.11 area, well, if we could see, hey, obviously that expected low is below our take profit, what is the likelihood? And is it high? Yes, it is. That is what this indicator essentially tells us. Well, we have a very high likelihood that we will actually hit our take profit on the day. So your various strategies or the ways you might trade and look at a chart and interpret what is happening can be combined with looking at the expected high and low. Now, if the expected high or the expected low, whether you're long or short, are way far outside of the range or where you would have set that TP or where you would have set that SL based off of your trading strategy and your trading plan, well, at that point, then you can make a decision if that's a good plan or not, right? I'm not trying to set a take profit that is never going to be hit or a stop loss that, well, hopefully, right, is never going to be hit. So we essentially want to make sure that we're using this historical data, which is being accounted for by that expected high and expected low and being shown very visually on a 4-hour chart, whether you're day trading or swing trading or even scalping. And no matter what strategy you use, you want to see if your targets, so your, again, stop loss or take profit, are realistic levels. Now, let's say for the second example, you just want to solely use this indicator to trade. Now, you can see most days on SPY, we are either going to be hitting that expected high or expected low, if not both, okay? Expected low was hit on this day. This day we hit our expected low, expected high. This day we hit our expected low, expected high. Didn't hit our expected low this day, but we hit our expected high. We hit our expected low this day, but not our expected high. Now, let's say you trade option contracts, which means you're able to go short, go long, buy calls or puts, and bet on the direction of that stock going up or down and make money either way. Now, let's say you've off the open here looked, and based off of our expected low, you've assessed, hey, here's our expected low at 620. 627.23. And let's say SPY opened at around 628.75. What you would do is say, hey, I'm going to buy some puts, and my take profit is going to be that expected low at 627.23. Okay, and you can see all my alerts going off here. Got a bunch of open trades right now. I can actually show you one of them real quick. If I pull up the trade I just took this morning on ticker symbol NVIDIA, I used a similar strategy and a similar theory here where I went short off the open, targeted that expected low at 172.44 as my take profit, and locked in profit. And that trade made me around 33% or 960, just about $1,000 on the day. And that was within about 30 minutes that I did hit that take profit. So you could apply this same idea or theory on any stock that you are trading. Again, you got to answer those 4 questions as a trader. What stock do you trade? What direction do you bet on that going? When are you right? When are you wrong? So I see this expected high and expected low indicator being used more as answering obviously where you right and where you wrong. So if you're short, your expected low is your take profit, and your stop loss is going to be that expected high. So for example, on NVIDIA, made $1,000 with my take profit at that expected low. My stop loss was at that expected high. Now on another stock, let's say, for example, we could pull up Microsoft. And let's say on Microsoft today off the open, we saw that, well, our opening price here was very close to our expected low, and our expected high we also did hit. Now we can obviously zoom in and look at a smaller time frame, for example, a 5-minute, and just know that this only will give you accurate levels on a 4-hour time frame. You can punch into a 1-minute though and see how price action looked on that given day. So off the open, let's chart out our opening price, which was, again, this is just going to be rough, around 512, 513. If we head back to a 4-hour, well, we can see here off of the open, if we were to have gone long off of the open, our expected high could have been our target, right? So if it's an expected level, we're using probabilities, there's a very high likelihood that we're going to hit that 516.63. Therefore, your win rate is going to be pretty high. And on the other hand, our expected low would be our stop. So if you're long, the expected high is your take profit. If you're short, the expected low is your take profit. So again, if we're long on Microsoft off the open, you could see, let's say, in theory, our entry would have been right off the open. We would have caught a quick move in again, I know this is in a pre-market scenario that we hit 518.07. And obviously, if you're trading option contracts, you can't buy options until the market opens. But this is just, for example, pretend that 518.07 is in and during market hours. Well, let's say you did go long off the open and you hit our expected high, you would then lock in profit. If you're trading shares of a stock and you did buy shares of Microsoft during pre-market, you could have used that as a take profit to actually get out of that trade right before the market open. Let's find a little bit better of an example. Let's say, for example, we'll look at ticker symbol LLY. Off the open here, we can see LLY. If we head over to a 5-minute time frame, we can generally chart out where LLY did open at around 76.85. Back to a 4-hour. And if we look at LLY here, we could see, well, we went and obviously saw this very clear directional move into that expected high. Does this indicator necessarily work better as a swing trade indicator or a day trade indicator? Not necessarily one or the other, but you will have to hop on a smaller time frame to get a better perspective. Obviously, we're looking back, so it's a little bit different. But if we look at the open here and you had something that answered those first 2 questions, obviously what stock do you trade, and you knew to trade LLY, and then what direction to bet on that stock going, and you knew to go long, well, then at least you know how to manage that trade. And you could see if you did go long off the open here on LLY and you set your take profit at that 768.63, that expected high, well, there you go. You would have hit take profit and you would have made money, and you would have had your stop loss at that 756.09. And obviously that would have been a very nice trade. Let's go through one more example of how you can use the indicator solely. Again, if you don't have another strategy to pair this with. And at this point, hopefully you should understand if you're using this as a standalone indicator, it should be used to manage your trades. You're still going to have to figure out what stock to trade and what directional bias, obviously, if you're going long or short, and hopefully you have some sort of edge that is going to help you increase that win rate, so you're hitting your take profit more than you're hitting your stop loss, ideally, if you have a positive risk reward ratio. But let's use Tesla as our last example here. Now, off the open, again, we're gonna head on to a 5-minute time frame just so we can have perspective as to where Tesla opened, which was just around 321.52. Now, let's say somehow you figured out you were gonna obviously trade Tesla, you were gonna go long on Tesla. Now you're like, okay, how do I know how high Tesla is gonna go and how low Tesla is gonna go? If I'm long, I wanna have, I wanna hit my take profit. I wanna make money. Well, let's say you set your take profit at that expected high at 327.80. And well, yes, you would have hit your take profit. You would have missed out on a little profit, but that's totally fine because you would have secured that profit and locked in that trade. And then on the downside, that expected low at 315.52, that would have been your stop loss. So again, if you want to make this more visual, if you're long, you can make this green. That's going to be your take profit. And then you can draw another level here at your stop loss. You can make this red, and then you can even hop onto a 1-minute time frame and you can remove the expected levels if you don't even want to look at that at all. But now you've got your trade plan off the open, long on Tesla, take profit at 327.79, stop loss at 315.52. So at this point, you should understand how to use this indicator. I'll give you guys this indicator absolutely for free, but I will say if you're interested in learning how to trade, becoming a consistently profitable trader, and if you have anywhere between 10 to 15,000 in liquid capital to trade or invest with, definitely recommend checking out my mentorship group where I trade live every single morning, and I'll send you my trades. So my entries and exits, you'll essentially be able to follow along and copy myself. I'll put a link in the description below to my mentorship and to the indicator. Subscribe for more, and I will see you all in the next video.